Welcome to this special episode of the Health Ranger Report that I call Sell, Sell, Sell. Today, the day I'm recording this, is October 25th, 2015. It's a Sunday. The stock market just surged last week to 17,646 for the Dow Jones. It was a big surge after a tremendous amount of volatility that happened earlier. And I am telling you now that you should strongly consider taking the action of sell, sell, sell. In my opinion, and although I'm not your financial advisor and circumstances may vary from person to person, but in my opinion, most people should be selling almost everything they own in terms of stocks, bonds, and mutual funds. Virtually everything needs to go. The market rise has given you what I believe will be one of the last opportunities to unload on these stocks before the real aggressive crash begins to unfold. Actually, it has already started to unfold. The volatility that you saw a couple of weeks ago was part of it, but there's a lot more coming. And you know how the mainstream media likes to say every time there's a market correction, they say it's a buying opportunity. Well, I say that right now, when there's a market surge, it's a selling opportunity. And isn't it interesting that the mainstream media never describes it in that way? They always assume that the market's always going to keep going up forever, infinitely. Of course, that's a false assumption. It cannot mathematically happen. In fact, many of the PE ratios on these stocks are based on corporate earnings that are also calculated based on infinite growth of the economy, which is, of course, impossible. But right now, what's propping up all the stocks, or most of them, is, of course, the money printing by the Federal Reserve, the quantitative easing, which is nothing more than fiat currency creation in order to prop up a failing, collapsing economy with massive unemployment and massive job losses caused by Obamacare and other government programs that are destroying small businesses, destroying the middle class, and destroying the ability for companies to hire workers. Obamacare is the reason that so many people lost their full-time jobs or were forced into part-time jobs of 30 hours a week or fewer in order for those employers to avoid the Obamacare cost mandates. That's exactly why it's happening. So, if you own corporate stocks, if you own bonds, if you own mutual funds, I think you should look very seriously at selling right now. And it doesn't mean that the market's going to crash hard tomorrow. The point is, though, you can't pick the top, and neither can I. The top is near. We're in that realm, I believe. And if you do not get out, if you do not sell your stocks and bonds and mutual funds, in my opinion, you will suffer a loss so great that it will take you more than a decade to recover in terms of gains from how much you'll lose. Now, keep in mind that I'm the same guy who very publicly and openly warned people about the coming crash in 1998, 1999, and 2000. And the dot-com crash did occur in 2001. I'm also the guy who warned people about the housing bubble crash coming in, 2007, roughly, time frame. Warned people all about the housing bubble, told them that crash was coming, and of course it did. And now I'm warning again. Of course, I have been warning for maybe as much as 2 years in a general sense, warning that something, some big correction/crash fallout is coming. But I've never had more of a sense of urgency than right now. When I see the signs of what's happening, I see the top corporations in America like Amazon.com and Apple and a couple of others earning as much as $11 billion overnight in stock valuation increases. I know that we are in a massive bubble market. When I see gift cards being sold at retail establishments that are actually stock gift cards, where you can buy a gift card and give someone a share of Apple stock, when I see that, I know we're in a bubble market. It's kind of like that comedian who does you're a redneck if you mow your lawn and find a car, Jeff Foxworthy. Well, I know we're in a bubble market when I see these signs, because I've seen it before. I'm not, the internet's dominated today by young people, and there's nothing wrong with that. Youth is fantastic, but the problem with youth is that you haven't been around long enough to see the way the world really works. A lot of people who are active on the internet today are in their 20s, and they weren't around for the .com crash. I mean, they were in elementary school or whatever. They certainly weren't active adults, so they don't know what market crashes look like. Now, I've been around long enough to see them. I was alive during the Black Monday crash of '87, of course, and I saw the .com boom throughout the 1990s and all the hype that went along with that, the CNBC nonsense, and the massive push for everybody to buy and hold and never, ever sell. And I saw the total insanity with the stock market boom, the .com boom, leading to the .com crash. And by the way, it was all the same rhetoric back then. They said that stocks will never fall. We were told that the rules of the stock market have changed forever, that you no longer have to buy based on actual earnings of corporations. Instead, you simply buy and sell based on the share price, and it doesn't have to have anything to do with reality. And that's what we're being told again now. The valuations of these tech companies, some of these, the new .com companies, are outlandish. Uber, tens of billions of dollars in valuation. Give me a break. There's no way it's worth that. The earnings will never be there. I was the one who was warning all my family and friends about Alibaba when that skyrocketed with the IPO last year, and people were going crazy with the Alibaba stock prices. I said, no, that's going to crash. Alibaba doesn't have a revenue model that supports the valuation of the stocks. What's happening with that stock is that the citizens of China are jumping on their own little .com bandwagon, and that's going to crash. And of course, it did crash, and it's going to crash way worse. Alibaba has a lot of downside yet to go. So if you want to take advice from a guy who is old enough and wise enough to have seen the hype, the propaganda, the crashes, the recoveries, that's me, but I can't make your decisions for you, obviously. You have to assess your own appetite for risk, your age, your plans, all of that. But in my opinion, leaving your money in the stock market is financial suicide right now. Now, there may be some really smart plays that are against the market, counter investing. For example, there are certain mutual funds that rise when the market crashes. And those have a role, and it may be very wise to invest in some of those if you have the ability to handle that kind of a risk. The risk in that kind of investment is that the very same corrupt criminal banksters and governments that are currently propping up the debt-based economy will be able to continue to prop it up for longer than we could imagine. In fact, I think we're already in that territory. See, I thought the market could have crashed, the global debt system could have crashed in 2008. And that's when the government had to create trillions of dollars in an emergency, and they had to get Congress to approve it. And they told members of Congress that if they did not vote to approve this massive $1 trillion bailout of the banks, that there would be martial law declared in America. And that's why they voted for it. The money was created instantly overnight, and that money was used to bail out the banks that were, quote, too big to fail. Too big to fail. It sounds just like a long-term capital management, LTCM. If you don't know what LTCM is, then you need to learn more about the history of crashes and bubbles, because LTCM is actually one of the early warning signs of exactly where this is all going. And I believe that year, I'm not sure exactly the year of LTCM. Was it 1997? Not sure. Maybe it was 97, 98, something in that time frame. Nevertheless, the globalists around the world, the global central bankers and merchants of debt, have been kicking the can down the road, so to speak, for many, many years, and they've been pushing these markets into ridiculous sky-high territory, from which the only way to unravel this is to experience a massive crash. You see, these globalists hate to have free markets. They despise free markets, and they despise corrections. They want markets to go up forever, so they prop them up, and they use propaganda, social engineering, and fiat currency money creation in order to prop these markets up. Well, eventually that fails, and when it does, because they've propped it up so much for so long, it will fail catastrophically. In the dot-com crash, some companies lost 99% of their valuation, others lost 100%. So when this crash comes, you may lose so much money that you may never recover. And I know the psychology of mainstream investors. As they're losing money, 10% a day, most people will stay in. They'll stay in because they will tell themselves, well, I've already taken the loss. I might as well hold on to the stock and wait for it to bounce back. That's exactly the way they think, and that's why they are suckers. And that's why they get wiped out in every crash. And that's why you have people who should have been retired today working as greeters at Walmart when they're 65. Don't mean to be harsh, but that's the reality of it. They should have sold the stocks and stayed in cash or other assets, and they would have saved their life savings from being destroyed and wiped out. So I have a full understanding of fundamental human psychology and the way the mass America thinks on these issues. Believe me, when the crash starts to happen, they will ride that all the way down to the bottom to where they are wiped out. The smart people sell at the top, and that's what you need to do now, in my opinion, if you want to keep what you've made or earned. Only a very small percentage will be able to get out at the top. I hope it's you. Thanks for listening. This is Mike Adams, the Health Ranger Report for TalkNetwork.com.